I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast, and today we are talking about self-employed borrowers and what makes them different. How do we underwrite them, and what's the biggest deal? Like, what makes you different if you're self-employed?
That's right. Self-employed borrowers make up, how many percent of our applications?
That's
40%, 30%?
Yeah, probably 30.
30%. You guys are some of the hardest working individuals out there. You're very, very creative, very, very motivated. But when it comes to self-employed borrowers, we ask two questions when you call us about getting pre-qualified or how the process works. And what are those questions, Ed? How much do you?
Well, we could ask, do you pay taxes?
Right. We could actually say, how big is your tax payment? Yeah. We could probably figure out everything that we need.
That's right. If you pay a lot of taxes, you're probably in business that can probably get a loan.
Right. So we'll ask, what's your net income and how long have you been doing it? So basically 2 years. 2 years is a very beautiful number. Every once in a while, you can get away with something less in it, but typically the self-employed borrower will be left stranded and frustrated if you go into a loan originator's office and the loan originator tells them that 1 year's going to be fine. Typically, it's 2. So why don't we jump into the big question about net income? And I think taxes keeps coming up because taxes is the one platform. That's the one medium that all self-employed borrowers have to really prove to the only entity that watches over them.
That's right. When it comes to documentation, when you have to prove to the underwriters, the bank, tax returns are the universal documentation we're going to all go to.
That's right, and I think I'd come up with this the other day. We were talking about this. It's like the kid who walks into the house and he wants to go outside and play, and his mom says, "Well, you got to do your homework." And he says, "I don't have any homework, Mom." So he goes out and plays and lives life, and then a couple of days later, or maybe it's that night. His dad comes to him and says, "Hey, you got to do some chores around the house." And he says, "Oh, sorry, Dad, I can't. I have homework." The mom and dad talk to each other. So the tax returns that are being submitted to the IRS talk and are used, in a way with how these loans are underwritten when it comes to, Freddie and Fannie. So
yeah, that's right.
That's important for people to understand. It's not like they're not totally connected, but they're still living in the same kind of house, so to speak. It's the IRS, it's the government, it's the Fannie Mae and Freddie Mac. They're all intertwined a little bit. And so what you tell one of them on the expense side or on the income side is going to end up, coming back to you when it comes time to get a loan.
So you can't have your cake and eat it too.
That's right.
When it comes to being self-employed,
you
either pay low taxes or you show a lot of money and can get financing.
Right.
So again, it's all comes down to net income, folks. And most of you who are self-employed, I should say, some of you really know your taxes and others just don't. Your business is just you don't know what your numbers are. And I think that what will be helpful in this podcast is if you're listening, you're not going to see what we're going to put up on the screen, but we're going to try to put up on the screen a couple helpful little the tax forms from 2018. That's the latest tax return right now that we're looking at. So we're going to bring up these and to be helpful. So if you don't know where your numbers are, you could pull up your personal tax return 1040. And what you'll notice is on the page 1 of your 1040, and folks, this is a different format. We're not used to this format. It's a small section on page 1. It just has personal information. It has where you sign and your tax accountant also signs. It's page 2 where all the summary numbers go. On line 1, if you are a W-2 employee of your business, you will have income on line 1. So yes, if you're self-employed, you can be a W-2 employee of your business. Of course, those of you who are listening will know that if you are an employee because you went through that whole setup process. So it's line 1. Again, it's the same line. It's the same. That's even if you're not self-employed and you're W-2 wage earner, that income goes to the same spot. But the point is that's where W-2 income goes. Now, line 6 is the next line I'm going to point out. That's another highlight. That's the income that's that's the net income that's going to report over from a Schedule E or a Schedule C. And 95% of you who are self-employed are going to be filing your returns on a Schedule C or a Schedule, or your income's going to come through a Schedule E. So, okay. But this line 6 is an important line where it's that net income comes right across right there. Okay. So, I want you to keep that in mind. And then, Tom, how am I doing?
Yeah, you're doing great. I don't think anyone's fallen asleep yet.
All right. So let's talk about, so that's the 1040 is the most, if you get anything out of this podcast about the tax returns, it's the 1040. Just look up page 2.
Mm-hmm.
Okay. That's the most important thing. Now, if you want to dig into your Schedule C, we'll bring that up here and show you that when you're looking at your Schedule C, that's for sole proprietors. If you're a 1099, you just 1099, you get 1099s from all your jobs. You do work and you just get checks from them, and then at the end of the year they 1099 you. That would be on a Schedule C. Okay. And it shows you add up all your checks, you have expenses, and it has a net income, and that goes right to the line 6 of your 1040. Okay. The Schedule C can be used for single member LLCs. And so we see that a lot. And it works. The Schedule C will work a lot like a sole proprietor. But again, Schedule C can handle the sole proprietor and a single member LLC. So the next thing, we're almost done. The next form that's really important is if you have an S corporation or an LLC, and it usually will be an S corporation. I say most of the time,
or a multi-member LLC.
Yeah, or a multi-member LLC. You're going to have a K1 that will show up on page 2 of the Schedule E. Okay, and it'll have the business name. It'll say whether you had a passive income or a non-passive loss, or there'll be the K1 sections will be right there to show whether there was an income or loss.
Mm-hmm.
Again,
and some of our self-employed borrowers can be quite sophisticated and complicated, where they've got multiple K1s. I mean, they could have, 5 or 6, several of which they're 100% owners of, and others they're just partial member.
Yeah.
Or partial owner. And one of the key numbers we work with is 25%. If you're a 25% or more owner of that particular company, we will typically always require and request the business returns. Yeah,
and the K1s, K1s will actually show the ownership percentage you have of the business. So, it's, again, and remember, the K1s is a form that really is generated from the net income from a business tax return. So if you have a K1, that means there's a business tax return somewhere. Mm-hmm. Now, in this podcast, we're not going to get into the business tax returns. What we just want to say is, okay, so I would just leave it there. Like the business tax return is going to have net income, or it will have the gross receipts and then a net income. That net income turns into a K1 to whatever, they give the K1s out to all the owners, but I think that's probably enough to cover for that. But I think at the end of the day, your income is going to report to the 1040 form. Okay. The page 2 of the 1040, and it's the net income.
And then also, I'll throw this out too. So, and we started it with this saying 2 years is kind of the magical, length, being in business. That's the minimum. If you can get to that 3, 4, 5 year mark, that helps. One of the big things you look for is that, the income is not declining by more than 10%. So if the income does decline, more than 10%, there's a little more underwriting that has to happen. And if we have a 5-year period, we can kind of explain, well, that was when the Great Recession was.
Yeah.
You were in the real estate market. So, we can kind of piece things together. So,
yeah. And some people have a year that just has unusual, like an anomaly. They'll have $100,000 of income, and all of a sudden, boom, 200.
Mm-hmm.
And then it goes back down 100. Just because if it declines from 200 to 100, That's okay if we can show history and that the average income.
Right. Yeah. As long as it was an anomaly. Also, not only for income, but for expense. You could have a borrower that has 1 year where they just went and bought trailers and trucks and all kinds of different equipment and got hit really hard with a ton of expenses. But if we got a long enough year or multiple years that we can look at, we can say, oh, okay, well, the likelihood of that level of expenses coming again, is not high.
Right.
So. All right. Did we forget anything?
We probably did, but I think it was good enough to leave everybody with that. Be sure to subscribe, email us, call us with questions. I think we pride ourselves for being really good with self-employed borrowers.
And how about this? And if you're like a self-employed athlete, and you make good money, the only thing we're going to ask is that you have a contract and that the contract needs to be good for, 2 or 3 years? I was
a contract for
for an athlete.
Oh, I don't even know.
Yeah, I think it's actually a 2 or 3 year contract. So, if we do have any athletes listening, make sure you get that contract at least for
I see. If they're borrowers.
If they're borrowers. Yeah.
Oh yeah, we've run into some baseball players where we've had they're temporary. But anyway, yeah. If you're a player. That's a whole nother thing. I think I can get.
Right. But if you happen to be one, All right. Well, thank you, folks.
All right. Everyone have a good week.
All right. Take care. Let's go home.
Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.